Good afternoon, everyone, and thank you very much for joining me. This is the non-farm payroll live trade. My name is Russell Shaw. I'm the Senior Market Specialist at FXCM. My email address is rshaw@fxcm.com. Today is Friday, the 7th of January 2022. Just going to bring up the high-risk investment warning, and I'll keep this on screen. Here's our market commentaries disclaimer. I'll keep this on screen for a few moments as well. And just in terms of our references, so we'll be trading on MarketScope 2.0. I'm going to have Trading View open as well. I probably won't reference it, but I'll show you what I'll use it for in a moment. And of course, Forex Factory. So we'll just see what the non-farm payroll numbers are coming out in about sort of 7.5 minutes. Here's the US dollar. I'm going to just change this down to the 1 hour. And this is on Trading View. The reason that I've got it is because this is a live trade, it's on a live account. And because I'm employed by FXCM, I actually don't have the US dollar on my system. It's just one of their compliance, I think, regulations. But it's a terrific instrument to keep an eye on. So just in case, this is the FXCM dollar index here, but I'm looking at it through Trading View. All right, let's just bring up the. Okay, so this is our layout that we'll be using. The trading is generally going to be done on this 1 minute chart. I've got a 1 hour here to reference, and I've got a 15-minute. But I mean, once we enter, and we'll be looking at euro US dollar only. So, but once we enter, I'll just hit the maximize button here, and we'll just be looking at that one screen for most of it. Let me ponder anything else I need to. 1 minute is very close to the tick, so the price is going to be very random, but nevertheless, we will use the stochastic just to assess momentum. But I think we'll get more to that when the trade is on. How are we going to measure success with this trade? And I think we just need to put some goalposts down so that we can sort of mark whether it's a successful trade or not. And successful trade means meeting these objectives. It doesn't mean profit or loss. In other words, we're going to put in a 20 pip stop loss. So if we get stopped out and we've kept our risk to 20 pips, that would be a success. Although it's a loss, and none of us enjoy losing trades, fair enough, but it's a controlled loss. Okay, we'll also put in a 20 pip take profit. Okay, so we'll put those in. So either of those get hit, we would regard it as sort of well played. However, clearly a 20 pip stop loss is the worst outcome here that we want to be exposed to. We don't want anything worse than a 20 pip stop loss. So what we're going to do is we're going to try and trail the stop loss. So if we can get out at a loss, but that loss is less than 20 pips, well, that's even better for us. So that's the way we're going to be approaching. So these are our goals. But we're not going to put on a position before the announcement. We're going to put on a position after the announcement. I actually think it's going to be quite a tough trade. This, I'll explain that in a moment. And the last month was also a tough trade as well. But it's just talk about our strategy. So after the non-farm payroll release, there's probably going to be some sort of big impulse move, either to the sort of northeast. We'll get something rising quite quickly up, or we'll get something rising, or something declining quite drastically downwards. We won't be in on those trades. What we're going to try and do is measure the pullbacks, and hopefully we can take the next impulse up. Now, that's the plan. So try getting either here for a long or here for a short, and hopefully the market cooperates with us. If it doesn't, we will have that 20 pip stop loss in. It'll be locked in, so it would be controlled. The reason that I think it's going to be difficult is because of the current hawkishness that we've seen in the Fed minutes. So there's sort of a heightened emotion, I think, in today's number. We want to see if we meet this 426,000 or not. If we beat it convincingly, well, I think that would be on the that would be the best scenario, in my opinion. Again, subject to correction, because it kind of lines up with what the Fed has communicated to the market. And then there's probably going to be some sort of movement against euro, pro US dollar, and we'll try to catch some sort of pullback there. But if we get a number below that 426, that's going to be a tough call. So because we're still in a very hawkish type of environment, and how the market's going to react, I think is it's almost difficult to comprehend. I would suggest that the market is ultimately net bullish on the dollar. So we'll just have to see how the market initial reaction is. See if the pullback gives us a leg in. Now, I don't think the unemployment rate is particularly useful. I do see it in the commentary, but it's usually not such an important number. It's the average hourly earnings we want to keep in. But I am actually talking too much. Just look at the charts. Let's see what's happening here. It's going to we've got 40 seconds. Okay, we've got 40 seconds. So we'll keep an eye on the inflation numbers as well, because a high inflation, a high non-farm payroll, to me, that's plays into the current theme for this week of a hawkish Fed. It may make the trade a little easier. If we don't get that, I think we're in for a tricky time. So that's kind of the pre-assessment. We've got 8 seconds here. Let's see how it. So we should get a big spike up. There we go. All right. So initial move, we're getting a huge push into euro. So I would suspect that the initial. Let's see if I can pick it up here. The initial is probably a miss. Let's see what we've got here. Okay, so actuals are 199,000 versus a forecast of 450. So that's very poor. All right, so that's why we're getting this big reaction into the euro. Let's go to That's going to make the trade a little tougher for us. Let's go here and see if we can just get the actual numbers in front of us. Just take a look here. All right, so the dollar shot down, and that's been faded. See, there's now we've got to kind of think, the unemployment rate's down. Again, I don't think that's the big news. We want to just see this average hourly earnings, and we know this came in at 199. Let's just redo this. All right, so now money is going back into the dollar, and all right. All right, so we've got inflation. This to me is the big one. So there's still rampant inflation here, and it's now on the earnings side. Okay, we know this is a miss. Non-farm employment came in at 199. There we go. So this is the I think this is the important one. Okay, that's my interpretation. The Fed minutes were very obviously. The communications thereof were very obvious in terms of concern about inflation, with the opinion that we're pretty close to full employment. So if we're pretty close to full employment, perhaps the non-farm employment change increases at a decreasing rate, but the inflation number, I think that's probably something that we kind of got to try and keep an eye on. And you can see, as I've been talking here, the initial market reaction was up, but that was faded almost immediately in the next minute. And I think that the focus is probably, on the inflation rather than the actual headline payroll number. All right, so let's just keep an eye on this. There's no trade on the moment, but it's pretty tricky here, right? I'll show you what I mean by tricky. Well, what do we do with these two? Okay, so if you kind of, if you take this, you get a big, okay, where did price open? Price opened here, okay. Now we've got a big down and price closes here. Well, that's a big Greystone doji when you combine those two. My preference here is actually to take the short and go with the inflation number and put in the 20 pip stop loss. So the way we're going to measure that is with what we call reference candles. So let's go through and see if we can pick up some entry conditions. All right. Okay, so what I'm looking for here is a pattern like this. Okay. So this is kind of the entry criteria, which we call reference reversals, which we talk about in our webinars. So we're looking for a candle that's got the highest high. Well, this one here has got the highest high in at least 3 candles, right? And then we're looking to for the next candle to move below the reference candle's low and close below the reference candle's low, which is effectively below the green horizontal. Okay, so that's why I've put that in. So that's the entry criteria, and we're getting pretty close to that. All right, so we're going to put in a position here and see if we can make it work for us. All right, so I was a bit slow to get that on. So we're short. You can see we're short here. Here's the 20 pip stop. We want to try and get that down as quickly as possible as well. And let's just see where the take profit is. Okay, that's a little purple limit. So this is the limit. And now we want to keep an eye on the stochastic to measure the momentum, right? So if the stochastic heads into that lower 20, we get into that lower 20, that's price closing in the lowest 20% of the range over 15 minutes, okay? Because this is a 15 period stochastic. So let's just keep an eye on that. And then just something that's, I think, quite useful is the show time to end, so we can see when the next candlestick is due. So in the next 25 seconds, we'll get the next candlestick, right? Here's the next candlestick. All right, so now we want to see if we get another reference candle here. I'm hoping that is so, because a bullish candle here is clearly not going to give me any comfort. If we can get price to take out our entry, then we'd have peak, trough, lower peak, lower trough. Then we can start moving our stop loss down. Just keep an eye on that stochastic. If it gets into that 20 area and holds, that's a huge positive for the trade. Okay, so we've got some support here that's we just got to keep an eye on. Another 10 seconds, we'll get the next candle. just keep an eye on that stochastic. So it's starting to curl up here, which is really not what I want. Just keep an eye on that. I want it to hit into that 20 and hold. Okay, here's another candle. So we're just wrestling with this support at the moment. Okay, so now this is it's moving sideways, which is not really what we want either. So the volatility is narrowed. Just to show you, this over here is also a reference candle, but it's a reference candle against us. Okay, so here's the lowest low in at least 3 candles. Here's the 2 conditions. So that's a bit troubling. Okay, so the last active reference candle is against us. We've got to see if we can get if price if sellers get back into control, we'll need a reference candle in our favor. All right, the stochastic still not in the ideal position. Okay, wanted to get in here. I'm going to start moving the stop loss down fairly soon if I can't break through this support, because if the support keeps holding, I think that might bolster the bulls. All right, so at the moment, guys, it's just moving laterally, which just got to see which way the break goes. I haven't really had the opportunity to pull that stock down just yet. Got another 10 seconds, we'll get the next candlestick. And we've just got this range going on. You can see sort of a very flat range. Kind of something like that. But there's just too much happening on that. Let's take that off. So we're pretty close here. This is 16, so we're 4 pips away. All right. Yeah, unfortunately, just never got moving in our direction. Take a look at that stochastic. You can see how it rolled away from that that 20 area. So once it started rolling away from the 20 area, it was going to always be difficult there. I think the market is quite perturbed, is not the right word. Just a little confused here. It's been moving sideways. And I think the reason for that is that you've got this strong, I mean, this is a very strong average hourly earnings month on month, very poor non-farming employment change, and the market participants trying to figure out what's going on. This is the dollar hourly chart. Take a look at this. It's a spinning top. Okay, it's a spinning top. It's a candle of uncertainty where bulls have tried to take price up, bears have tried to take price down. Neither side has got any control or momentum, and we're right back in the middle here. So that's what we were dealing with on this trade. And it's, you know, as soon as we missed the NFP, I thought it was going to be a difficult trade. Anyways, we'll do it again in February, first Friday of February. I want to thank everyone for joining this this webinar. I hope that you found it useful, albeit that the stop loss was hit and not the take profit. If there's any questions, please go ahead and type those through. All right, nothing coming through. So I'm going to conclude. Again, thank you very much to everybody for joining, and I look forward to chatting with you in the near future.